Pradip Shah. He's chairman at IndAsia Fund Advisors. Joins us right now on the show. Mr. Shah, it's been a while. Good having you. Thanks so much for taking the time out. What have you been doing? Have been scouting around for opportunities in this correction that we've had over the last month and a half? Or do you believe there will be ample opportunities to buy a bit later on in the year?
I think there will be more opportunities to buy individual scripts later on this year. I think we have seen good results from companies for the December quarter, and likely the similar performance in the March quarter, good results compared to the previous year, because there is momentum in the economy after two relatively good monsoons. Unfortunately, last year's was erratic, but still overall reasonable. There was pent-up demand which had been bottled down by the demonetization, then the supply side GST headaches, and then a little bit of this Aadhaar and so on and so forth. So now that seems to be behind us, and therefore that pent-up demand is manifesting itself, whether it's in automobiles or tractors or consumer durables. So this momentum will continue. But going forward, because of the uncertainty of the Indian politics, as well as certain global uncertainties, I think there will be opportunities to buy. Now look at, there's a possibility there might be some attack on Syria by the United States as punishment for their alleged chemical attacks. That could be a trigger. I think the trade issue will blow over. The US-China dispute will be resolved through discussions. But oil prices at $70 a barrel for India is not good. And then we have political uncertainty. The most important, we have election in May in Karnataka, and then later on this year, perhaps not just state elections, but also central elections, though the central elections are supposed to be for next year. The parliament, the government might bring them forward to coincide with certain state elections and not have any repercussions of any possible negative outcomes in the states. Now, if that happens, will the existing government still get the same kind of majority? At this time, it's a bit doubtful. It looks uncertain. There's a lot of negativism in the economy on that front. And therefore, that uncertainty, as it comes closer to resolution, will be reflected in share prices. So individual scripts will be available, I think, for much better valuations over time if you have the patience and the liquidity.
Good morning, Pradip. Hi, this is Darshan here. Any view on the metal space? A lot of things going around globally in commodity prices. They're inching to new highs. Any view on the metal space in India?
Well, the Indian metals industry has done very well on the back of now tariff, but earlier the China was cutting back on its production. Most recently, you saw it in aluminium, and you mentioned earlier how Vedanta will benefit from the reduction in aluminium production in China because of pollution. So clearly, the metal pack has benefited in India. Going forward, if interest rates go faster elsewhere than is expected, you know, in the US they are talking of 3 hikes till December, but the CEO of JP Morgan Bank has talked of a possible surprise in terms of inflation, and therefore faster and more accelerated increase in interest rates. Now, if that happens, commodity prices have to come down. There is no way, there's no two ways about it. Even though the global economy is doing very well, US, Europe, Japan, China are all growing, and so is India. So there is this buoyancy in the commodity prices, but it can be punctured by inflation and then the anti-inflationary stand of central banks in terms of interest rates and tightening money supply. As it is, there is the QE3 is being reversed, and no one has seen the outcomes of that because we have not had a precedent of this kind of QE3 and this kind of reversal.
Okay. So even if the earnings growth is promising, and I remember that the last quarter, somewhere around January end, when we were having a conversation, you were talking about how about 180 companies out of the ones that you tracked came out with numbers which were better than estimates. The scene might only look better this time around, and maybe for the quarters ahead. You think the positive and strengthening micro will be overshadowed by the macro? And having said that, even if that were to be the case, what are the pockets that you're looking out for? Where would you believe that, according to your team's analysis, earnings growth will be much better in FY19?
So firstly, I think this momentum in the economy, and the Reserve Bank has come out with the growth rate expectation of 7.4% for fiscal 2018 and 7.2% for fiscal 2018 and 7.4% for fiscal 2019. That itself is a pointer. RBI has also said that inflation will be a little less than what was anticipated. So those signs are good signs for India, and coupled with that, the momentum in the economy in terms of demand, because of pent-up demand, because of continuous growth, because of the government initiatives in bringing down prices through GST in many cases and so on, will lead to continuing good performance this quarter, that is the March 31st quarter, as well as I think the June quarter. I think the sentiment, however, may undergo a change. So there will be a catch-up. The prices of share price in general may not move up because they were already anticipating this kind of growth. But they will wait for the uncertainties of the elections, of the oil prices to resolve. And don't forget, there will also be something factored in for possible currency volatility. Next year, we have about half of our $500 billion of debt. We have $500 billion of external debt. Half of it is coming due for maturity or rollover next year. Now, if there is political uncertainty in India or a sense of uncertainty, money flows might dry up. We have been supporting our huge trade deficit by capital inflows on debt or on equity account. Now, if those slow down or dry up, and remittances have already slowed down a bit, if they dry up, then the currency, Indian currency, can dramatically reduce. Now, that gives an opportunity in any case for people to plan for their investment. So, for instance, the IT sector, which is such a big foreign exchange earner, can be a long-term beneficiary. As it is, most of them don't need capital, so they will not dilute you. They have cash reserves, so they have no debt issues, and they are all changing. They are transforming themselves from pure support services providers to actually providing solutions, and therefore they will be getting better realizations and better. And some of the Indian IT companies are excellent in this regard. They have the thinking, they have the resources, and they are now offering these solutions. So that is one sector. Another sector which has been beaten down, which may offer opportunities, is the pharmaceutical sector. While the United States is, of course, more inward-looking just now under President Trump, they will realize that for their budgets to be contained, especially in the healthcare space, and healthcare spending in the United States is about 16% of the GDP. They cannot continue with it like this forever. One of the ways is to have, for instance, medical facilities or products imported from lower-cost countries such as India, and India is very well positioned for that. We have been improving our quality. We've learned our lessons from the FDA inspections, and so I think in general we are now better equipped as Indian companies to address this FDA issue. So now it's the US policies, and there's been consolidation in the United States on the buyer side of our drugs, but Indians are also addressing that issue by buying brands over there and so on. So I think overall that sector can also do well. Also, Indian companies are going into biosimilars as well as into more complex molecules. That also should give them rewards. So, and of course in India, the consumable sector, the staples, are of course doing very well. And you will see they will continue to do well because we've crossed that per capita income at which stage we see a continuing growth in consumption.
Okay, Pradip, any pockets where you're seeing value, if an investor is looking to, let's say, buy for a year or 2 years, any pockets in this correction that you see value and should be accumulated into?
So in the sectors, as I said, in general, I'm a long-term investor. I look at much longer horizon than 1 year. But certainly, I feel that the IT sector does give opportunity as a sector as a whole. The pharmaceutical sector, selective picks will give great opportunity. And then across we have a large number of listed companies. Some are under research, some are under followed. And therefore, there's always an opportunity to pick winners from there. So doing due diligence by an investor on management's product lines and the company's position will definitely give superior returns to them. And I think with the uncertainty that is, as I expect, going to be manifest going forward, there will be even better opportunities than today to buy individual scripts.
My last question, Mr. Shah. You've been a fan of companies which have cash flows, so over some of the other aspects, cash on books, regular cash flows, so on and so forth. IT obviously forms a part of that bucket. Anything else in the old economy names which is looking like making a bit of a comeback and adhering to some of these factors as well? Because the last few days we've seen some of the old economy stocks make a bit of a comeback.
Yes, so I think old economy is not to be ruled out. We do need steel, and we do need cement and so on. So without that, we cannot grow. Logistics, for instance. So there are opportunities in those sectors, as with the GST introduction and the e-way bill now in place. And Dr. Adhya has said that it's working very well. I think there's a golden opportunity in that area, because we'll bring down costs from 13-14% of GDP to eventually maybe 6% or 7% as other economies do. And there will be so many winners in this logistics space. So there are definitely sectors within that. One has to drill down and identify individual companies where relative valuation is better, where relative management is better, or where their positioning is better than their competitors.
Certainly so. Well, maybe on a different forum, we'll talk a lot more about some of these niches as well. But Mr. Shah, thank you so much for taking the time out and joining us today. Always appreciate your time.